Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers measure risk. I'm your host, Jim Matthews, reporting from Chicago. Joining me today, as always, from Kansas, Director of Feed Foundations, Mr. Jake Santa Claus Kinglsey. And returning to the Grain Feed from Madison, Wisconsin, Senior Market Advisor, Miss Katie Burgess. Team, how are we today?
I'm excited to be here with Santa Claus.
Ho, ho, ho.
Santa, it is so good to have you because it's been an interesting 2024, hasn't it, Santa?
It definitely has. I'm glad to be back. It's been 2 years. Got in a little bit of a scrum with the abominable snowman last year and
Heard about that.
just about didn't make it to Christmas.
Little tussle there in the old North Pole. So we missed you last year, but it's good to have you back. Guess we can be talking about whether these markets have been naughty or nice.
Think that's a good topic for today.
And Katie, how are things up in Madison, Wisconsin?
It is a snowy day, our first real snowstorm of the season, so just in time for Christmas.
Okay, excellent. So potential for a white Christmas up north.
Seems like it.
We're supposedly getting some of this afternoon or this evening here down in Chicago. So it has not begun quite yet, but supposedly it's coming. Kids are thrilled. Adults, I guess if you're Santa, that's great. Santa loves snow. Easier to land your sleigh on the rooftops. Isn't that right, Santa?
Better for the hooves for sure.
You're always looking out. I think before we get started real quick, we've had a lot of questions from viewers over the last week or so. Katie, eggnog or hot chocolate?
Definitely hot chocolate.
Oh, wow. Interesting. Jake? Santa?
I'm an eggnog guy.
Yeah, I figured. Yeah, eggnog guy. I'm more of I don't do either really, but if I had to choose, I'd take some hot chocolate. But, maybe spice it up a little something. What's in your eggnog there, Santa?
A little bit of brandy, maybe sometimes a little bit of bourbon.
Attaboy. There you go, Santa. I mean, that's how you get through that long winter's night there. If I'm going to do hot chocolate, a little bit of Bailey's or something in there, Katie. How about that?
I like that. I'm a Bailey's fan, so, it's got dairy in it, so supporting the industry.
Just trying to support the industry. If you're not going to do eggnog, right, with a lot of cream in there as well, you got to support the industry a little bit. Throw some Baileys in, make it a holly jolly Christmas here. So that all being said, we have a lot to talk about today before the holiday break. So let's get to it. Paige, if you would kindly timestamp the broadcast, it is Thursday morning. It's about 10:20 or so Chicago time. Had a very interesting 24 hours here, actually even less, because yesterday afternoon on Wednesday, we had the Federal Reserve Chairman Powell announce that the Fed was going to cut interest rates by 25 basis points. However, he also suggested that maybe running through 2025, we would be reducing the amount of cuts that I think the markets were anticipating as we were heading into that calendar year, maybe down to just a few and be a gradual process here as we move through 2025. So I think the markets reacted in terms of the U.S. dollar saying, great for me, and testing new highs of the last couple months. But commodities kind of took a beat down for a little bit yesterday afternoon. And as we do look at the markets, we had corn down about 5 or 6 cents yesterday. It was a pretty hefty pullback and one of the better ones we've seen in some time. It's currently trading roughly unchanged. We have March corn up just a cent, so a slight rebound, trading just above $4.38 per bushel. Beans have been in somewhat of a bloodbath here in terms of its aggressive pullback yesterday. I think we can thank some very, I say, generous weather in South America as well in terms of, some of their crop development over the last few weeks, but also, at least for now, forecasted moving forward. We had Jan beans break all the way through 950 here this morning. It's bounced back up a little bit. It's up about 8 cents per bushel. So trying to fight its way back to 960. But then that overall impact on the soy complex, we saw Jan meal that not as stubborn little byproduct. It is up about $3 at the moment, but still remains closer to that 280 level. And we broke 280 per ton earlier as well. So we're seeing a lot of opportunities in our protein market, and we will touch base with Santa Claus here in a minute to talk about those opportunities. But I suppose grains, we're not the only markets to be affected by this yesterday. And there's also a big milk production report here this afternoon. We are recording Thursday. So by the time this is released, that report will have come out. But we'll be asking Katie now, what are we thinking about this milk report here this afternoon?
You're right, Jim. It's a big one. I think the market's really been waiting. So over the past month, we've seen a rally. Yesterday, a bit of a pullback with the rest of the broader markets. So I think market participants are really waiting to see what happens. Our expectation for this afternoon's report is that we'll see positive growth yet again in the U.S. milk supply. There's a lot of talk out there, though, of what's going on. California, once again, a big watch factor. So this will be the November data. We know that California milk production was down about 4% in October due to avian influenza, and our contacts suggest that number will be even bigger here in the month of November. So definitely waiting to see how much was California impacted. Also, just a couple notes on California. Yesterday, Governor Newsom in California declared a state of emergency in response to avian influenza. As the virus continues to move around the state, they are looking for some funds for increased monitoring, a more coordinated response. So waiting to see there. I don't know that it has a big difference on what's going on, but definitely you can see just the concern there is ramping up. But then to me, probably the more important thing in the report is going to be what's happening in all these regions where we're adding cheese plants or cheese capacity. It does seem like, that's the story for 2025, that avian influenza is going to run its course in California. Hopefully in the new year, they can put that behind them. But how quickly are we going to add cows for these new processing capacity plants? And what does it look like? How fast is milk supply growing? So to me, that's going to be the big watch factor in the report. And looking ahead into the new year, 2024 was a year where we saw a lot of milk production contraction in the first few months of the year, but looking for much stronger growth in 2025. I know that heifers have still been hard to find and very expensive when you can find them, but we have seen growth around the edges and expecting 2025 milk production to be quite a bit bigger than we've seen in a few years.
And Katie, in terms of the milk production report, you talked a lot about the bird flu in California here. I know that's probably a big focus for a lot of people. Is California remain like the focal point for this report, or is there more so of a, hey, let's just analyze how the country's doing as a whole?
I think it's a little bit of both, that all the chatter leading into it has been about California because that's been the hot news over the past few months. But to me, I think those other states are more important because that's going to set the tone for supply in 2025.
And the cheese plant capacity that you're referring to, that is largely outside of California, correct?
Exactly. So we're watching states like South Dakota, Kansas, Texas. New York is adding a lot of capacity. So to me, it's watching the cow numbers in those states, how milk production's doing. And what we saw last report was those areas with the new capacity were the areas where we saw the biggest growth. So if that trend continues, I think it just gives the market more confidence that, hey, we will have milk to help fill this new supply, because that was a big question in 2024, given that heifers have been hard to find. But as we get toward year end, it seems like the cows are adding up a bit.
And it does feel that, some input costs have at least started to come down and remain under pressure. Are folks that you're talking to feel comfortable with operating margins, or at least more so heading into the end of 24 than they were end of 23, especially from a feed perspective?
No, definitely. I mean, watching the feed costs come down have been a big help. Also, this market, Q1 futures have been back to $20 in the past week. So for producers out there, they've had a lot of good opportunities to lock in some good margins for 2025. And so for folks out there, I'd say it definitely makes sense to keep thinking about 2025. There are risks out there. Growing milk production will be there. We've got a lot of things on the macro environment front that we don't know how are going to impact milk markets next year. So with milk prices being at pretty good levels in both class 3 and class 4 right now, continuing encouraging folks to look at DRP insurance to protect a good floor, and then, work with the feed team to get some good feed prices as well.
Excellent. Well, thank you for that, Katie. I think that's a great shout out to the feed squad here, but also a great transition down to Kansas, where we have Santa Claus is a far, far away from the North Pole right now, but we're glad that you were able to withstand the winds of the great state of Kansas. Katie talked about some of the opportunities we've had, especially with feed pricing coming down. Talked about the Fed impact yesterday and some of the pressure that we've seen on the markets there. But hey, Jake, protein markets have managed to make new lows yet again. And I think even that nearby meal contract is about coming down to that level where we've been telling a lot of folks, hey, nearby meal pricing at the board over the last 8+ years or so, we're looking at it right about now. Usually it comes down to the support of just under that 280 level. There's not a whole lot of time where you go back and look at that nearby meal chart and say, yes, we feel very comfortable in a holding pattern under 280 meal. That's not the case. We usually come under there for maybe a week or two at a time and then usually regain some strength. Again, that's just the last 8 years or so, but I think it's a pretty good indicator of how we should take action. What have you been seeing and telling folks on the protein side the past week or so?
That's right. This opportunity is typically short-lived and few and far between. So we saw it here already this morning, a nice little bounce right off of that low created. Well, we created just a little bit more of a low this morning, but we've bounced off of it already by a few dollars a ton. And not just the nearby contract. I think if you really wanted to be patient and take some risk, you could wait on the deferreds out there. What the nearby is January, and then March will get going here pretty quickly. But if you wanted to wait on the May and July contracts in August and September, we're really only talking about a handful of dollars there. We've got a lot of weather to contend with still in South America. We've got planting intentions here in the US now, 100 days away. Right now, it looks as if the market is favoring corn acres pretty strongly versus soy. So not a ton of concern for a huge rally higher from here on soybean meal. But this is an opportunity, and we've had a lot of folks stepping in, both on basis ham futures over the last couple of days, really the last week or so, and taking advantage of that. If you priced everything you needed through next September, I don't know that you're going to miss it by a whole heck of a lot without some sort of, I guess, what you'd call a black swan event, likely induced by either much larger than expected production in South America, which is already big, or more likely some sort of a tariff situation reducing demand considerably. So stepping into that market feels like the easy thing to do right now anyway. And then you take kind of a look at corn. Of course, we've had this rally in futures, but I think that's presented opportunity in the basis portion of this thing. Now we've had very attractive basis numbers across the Midwest for most of the second half of 2024. We're starting to see those values translate to the destination end of these rail markets where we've been elevated 20, 30, 40 cents higher than we thought we should be at the end of this thing. For example, we're seeing things in California finally hit that $2 basis mark on processed corn picked up at a feed mill, looking at some similar types of numbers in Arizona, and then in the 170-ish type of range in Texas and Idaho and some of those other a little bit closer, but still Western markets closer to the Midwest. So we're starting to hit those targets. Some of those places are doing January through September. Some are just now January through March, but the opportunity is there. And we're hitting the targets. Been getting a lot of questions. Should I take this number or should I try to readjust and see if we can work this thing lower? These are the numbers we've been talking about for months and months and months. So I think you got to do something here and then try to work the futures as we move into 2025 and maybe start to see South America's crop really be more defined and more grain moving off the farm and out of the Midwest here in the US.
Yeah, and Jake, I think what you said about like these have been our targets for some time, and we've been showing, especially like on protein again, like we've been showing those futures charts and where the long-term support is for 8+ years on that soybean meal product at the board. This is what we've been waiting for. So like, yes, over the past month or so, we've been advising folks to step into more protein. We are finally here. So it is a maintain our convictions here. If you are still open on protein for this current feed year, it's time to do it. It's time to take action where we have this thing right now and potentially even start looking at where we're trading these 25 futures and say, maybe I step in and start hedging some of next year's protein pricing as well. And I don't think in the past few years, Jake, that we've been super aggressive this early on stepping out to protein that far ahead. But in terms of hedges, I think we are at this stage, right? So we are at a point of action. And I'd say the differences there with corn is that, yeah, corn has remained fairly stubborn. The export market has remained very strong. Ethanol market continues to churn. So we've been able to keep corn in this like really a 25 to 35 cent range now over the last 2.5 months. It's a pretty long stretch of trading this, sideways. So not as many opportunities there at the moment for the second half of the feed year on corn, but D's 25 corn remains under some serious pressure and feels very comfortable with global supply as you look beyond the South American harvest that will be happening Feb through, let's say April of 25. So also hedge opportunities on that front as well. So it's going to be really interesting. And then Jake, before we wrap up here, the tariff situation, Santa spends a lot of time, crossing borders, bringing goods across international boundaries here. The tariff situation, when President Trump takes office and he's claiming he's going to ramp up the trade war. How does this work exactly? Are we more concerned with what Mexico imposes on us in terms of the grain and feed market, or is it the other way around? Help us out.
These tariffs shape up to where the tariffs that are implemented by Mexico and China would affect our corn and soybean meal values typically negatively because they are putting a tariff on those products, corn and soybean meal, in response to us putting a tariff on, say, electronics or cars or other raw materials coming in from their countries. And so for those two particularly, they kind of hold the cards as far as the valuation on those tariffs as well as the timing of implementing those. So they could potentially come in and immediately put tariffs on these products and slow down their purchasing, increase the cost of them, and discourage their buyers and importers there domestically from buying from the U.S. and turn to other markets. They could also wait several months or a year or however long they need to load up their inventories, get comfortable with what they've got, know what they've got coming to them from South America, and then put tariffs in place to increase the cost of our products and discourage purchasing from here. We have far less control in that realm. One that we have been watching and are trying to better understand here in the very near future is if the Trump administration were to put a tariff on Canadian canola early on, that could jump the price of canola that crosses the border into the US by 20 or 30% overnight. And that would effectively increase the cost of all proteins to a certain degree here in the US. Not necessarily one-to-one with what canola moves, but we would have a little more control of that one, or I say our government would have more control of the timing and value of that one. As far as we can tell, I think folks need to kind of start to prepare for that to happen. Regardless of when you bought that contract, I believe that there are rules in most of these contracts that the tariff would be the burden of the buyer or the end user. So either your feed mill or you as the dairy or feeder could end up taking the brunt of some of that. Now, if we compare it to how fuel surcharges and some different additional costs played out during COVID, a lot of times the vendors tried to absorb some of that. They did have to pass some of that along to us. It's hard to know just how exactly that would play out. And also, there's a little bit of hope here that some of this has been rhetoric, and a lot of these world leaders have seen this once before and are coming to the table early to try to discuss and negotiate and avoid some of these tariffs. So there is hope that we could avoid it altogether, but we do need to kind of prepare for that as end users.
Okay. This is going to be happening quickly now, right? We're going to have a couple weeks off here in terms of recording the show, and then we're going to kick back up in January. When we do, we will have a new Congress taking shape here that first week of January. And then President Trump takes over that third week of January. So we're about a month or so away of starting to find out, as you suggested, is this rhetoric or is this an actual game plan that we're stepping in and going to start imposing and enforcing, some of these changes and how it impacts our industry. So 2025 is going to be super interesting right off the bat. So please stay tuned. Santa, before I let you go, I just need a quick refresher. Names of your 8 reindeer.
Come here, May. We got Dasher and Dancer, Prancer and Vixen, Comet and Cupid, I forgot what I said. Donner and Blitzen.
Yeah, that's what I was gonna say. You were right there. Very well. Thank you, Santa. I appreciate that. Sometimes I know it's tough, and you've got a substitute reindeer with you at the moment. It's not Rudolph. It's more of like a Max from the Grinch type of setup instead. So
He's pretty good. Oh, that didn't work out very well.
we appreciate your efforts.
She's in her all black for extra camouflage this year. We got too many kids with iPhones trying to pick us up.
Oh yeah, sure. That's a very intelligent. Yeah, Santa's got to keep an eye out for social media. And so it's a tough world out there, Santa Claus. Be safe. Want to thank you both for joining the show today. Katie, huge thanks. Jake/Santa, thanks for being on with us. Merry Christmas to you guys. Thanks for a great 2024. That goes for the whole Insights crew here as well. Lexi, Paige, shout out to Corey as well at home, hopefully watching and listening, for a great 2024 that we've had here at EverAg for this squad. I'd like to thank all my coworkers, our clients, family, friends. It's been a great run. We're looking forward to reconnecting on the grain feed in 2025. So that being said, Merry Christmas. Thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next year on the grain feed.
Ho, ho, ho. Merry Christmas. All right, that's all I got.